Hey there, it's Trisha with Easy E-mini Trade, and today I just wanted to show you a couple examples of divergence today. When we get divergence, when we're coming up to resistance, we can short, and when we get divergence and we're coming down to support, we can buy. So I find it really helpful. I'm going to be doing a webinar on Thursday evening at 8 p.m. on the Slinky and using the filter to take the Slinky trades, but I'm also going to go over divergence in your trading in different ways that you can use it. So if you want more info on the webinar, you can go to my site, www.easyeminitrade.com, and click on the webinar tab at the top, and all the information will be there. So what you're looking at here is the NQ for today, October, what is the date today? 6. And I mark support and resistance on my charts. I prefer to do it myself. The only exception on the NQ is that I'll just use the pivot point, and then on any other instruments I trade, I do use all the floor trader pivots with midpoints. Now, because I've traded NQ for a long time, I know that anytime we get around this round number area, so today it's 4,300, we can tend to get stuck in a range in that area. So usually what I'll do is I'll pick an area just above and just below that is continually holding, and you could do range trades when you're stuck in that range, or you can just wait till you get out of that range to take any trades. So in looking at, let me just make this a little bigger here. In looking at the NQ today, you can see we've got this area of resistance holding right here just above the 4,300 area. So you can see it holding. Here you can see it tried to break through and it failed. So I love to see that when it comes to resistance and it tries and then it fails. You'll notice here, this is a stochastic, and the settings that I'm using on that are 14, 3, and 3, and I'm just drawing the K line on that. Let me just make sure before I say. I'm pretty sure it's just the K. Let's see. Yeah, I'm just drawing the slow K. And when I say 14, 3, and 3, 14 for the fast K length, 3 for the fast D, and 3 for the slow D. And I'll go over all this on Thursday as well. So what I like to see is it coming up to resistance, and you can see price is making a higher high here than here. Well, my indicator is making equal highs. So what that's telling me is that this is likely to pull back off of resistance. Now, obviously we don't know where it's going to get to, but in looking here to the past area of support, this is the 50% fib retracement area right below me, and then also I've got the 200 EMA, which often holds as support as well, or resistance. So when we're coming up to resistance and I get divergence, I can go ahead and short off that. So what I'll do is I'll generally, you can be really aggressive, and as soon as you see divergence, just hop in short. You can use a pretty tight stop just above the highs there, or you can wait for the stochastic to get below 80 here. That's what this line is here, 80 and 20. You can wait for the stochastic to get below that and then get in under the bar that's giving you that. And the target would be hopefully the 50% area. If not, then we're looking at the 4,300, then the pivot point, and the 200, and then down to the 50. Here, off the 50% retracement, you can see we had divergence to the upside here. We had a lower low here than here, and on the stochastic we had a higher low here than here. So they're not doing the same thing. So whenever you see your indicator, be it a stochastic, an RSI, any kind of oscillating indicator that you're using, you can look for divergence on that. So when you see that they're not doing the same thing, and by same thing I mean if they were doing the same thing, what we would have is we would have a lower low on the stochastic here than here, just like price. So we don't have that. So that's basically telling me that it's probably going to bounce off that. So in spotting divergence, if we're not in a range, we could just get a couple bar retracement on that. So anyway, you could buy here, you could sell up here, you get down to the 200 here again, and we get divergence to the upside. So this one will be a little bit more on the risky side because this still might have the capability of trading down to the 50%, but it's not that far away, so realistically your stop would hold if you put it under the 50%. So you buy it up here. Here we don't get divergence and it doesn't hit resistance, so nothing to do there. But here it tries to break through again and fails. This white line here, it tries to break through and it fails, and we get divergence to the downside, so you can go ahead and short off that. And actually, if you could even go back a little bit further than that. You could actually go here to here, and let me just see if I can get that, grab that there to there. So we definitely have divergence there, whether you're taking it from just here looking for it, but it actually goes all the way back here, and then you can short off that area expecting to get again the same thing, 4,300, the pivot point, and then the 200. You get a little bounce there, and then you hit down there at the 50%. So getting back down to the 50% there, we don't get any divergence telling us at this 50% area to try to buy that. So you wouldn't try to buy it. Okay, so I hope that helps, and if you have any questions, you can certainly shoot me an email. Okay, have a great day.